whereas the Nifty itself is down by about 2%. But let's talk about a bunch of stocks which are in focus. We have the premium automobile dealer Landmark Cars, a weak debut on the exchanges, listing with an 8% discount to its issue price, sitting with a cut of about 9% right now from the issue price as well. Mr. Thakker, who's the chairman of the company, joins us to tell us more about the plans for the business post-listing. Thanks a lot, Mr. Thakker, for joining. And now that you've listed, everyone will be eyeing what you do in the business a lot more. Just from a business standpoint, just wanted to understand what is more accretive for you, selling new cars or selling after-sales cars? Is that more return accretive? Your current ratio is 80-20. Where does this go going forward?
Yeah, so we do a very interesting kind of business.
Yeah, go ahead.
The after-sales business for us is something which keeps on going on and on. It's like an annuity type of a business. So as many cars as we put on the road, they will give us income for the next 6-7 years. Last year, for example, we serviced close to 280,000 cars, which includes the accident repair ones also, and generated around 107 crores of EBITDA over there. And if you kind of go back last several years, this has been growing at a pace of 20% or more year on year. So this is something which is a 40% gross profit, 18% EBITDA margin business. 1 in 3 cars that you see on the road meets with an accident every single year. We'll get maybe 65,000 accident repair jobs this year. Now, this is something which is a high margin, predictable business. Nobody goes outside of the authorized dealerships in premium and luxury cars. So this is a predictable business. We make a good amount of money in car sales also because the car sales, the margins also include the insurance and the finance commission. So when we have the tailwinds behind us, we have a complete bouquet of things that are going for us, like the time we are in right now.
Okay, all right. Mr. Thakker, good morning. I wanted to understand, now that you're saying you're making decent margins in the new vehicle sales as well. You have around 5 brands in your kitty right now, the biggest one being Mercedes. There's Volkswagen, Jeep, Honda, Renault as well. Are you looking at tying up with any other new brands? Are those discussions in place? And this 80-20 split, do you expect it to change in next 2 to 3 years?
So you missed out BYD. So we have also signed up with the largest EV manufacturer in the world, which is the BYD. And what you will see from January, as soon as January, is the deliveries of the Atto 3, which is the nice fully electric car with 500 kilometers range. We are kind of sold out for rest of the year from what I believe. So the deliveries of those BYD cars will also start. Landmark will always remain in the premium and the luxury segment, which is the fastest growing segment that we all know. And so our sweet spot is vehicles above maybe 10 lakhs or so. And this is where the margins are, this is where the growth is, and this is where Landmark will be.
Okay.
30% of what we have done so far is by way of M&A. So, I'm sure a lot of other doors will open up and we will go to geographies and brands that we haven't yet represented.
No, I was going to ask you about BYD, but since that's the EV side of things, I wanted to ask specifically what's happening here, because you're talking about signing a letter of intent with BYD, which is a leading player in the global EV market as well. When you're saying it'll start, you'll start deliveries from January, what kind of kitty are you seeing here? What is the opportunity size?
So we have been already selling the BYD vehicles, which was the E6, which was earlier mainly for the leasing companies and the commercial segment. But the passenger car segment is what we will start delivering from January. We are dealers for BYD in the large markets of Delhi and Mumbai. So that's what we are going to be doing, and God willing, things will do well.
All right. You said that, after sales is a 40% gross margin business. Can you give us a sense of your margin breakup across all the services that you offer? You have new vehicles that you sell. That's the mainstay of your business. Then there is after sales, which is annuity. What kind of margins do you get there? Sales of pre-owned passenger vehicles. What is that as a proportion of your sales? What margins do you get there? And then you also, like you said, get margins from, financial and insurance products. So what is the kind of margin breakup across the value chain? Can you give us a sense?
Yeah, I'll give you a broad thing, the way it is. Let's first talk about the after-sales business. So in the after-sales business, we do two things. One is we sell spare parts and accessories, and the other is where we sell our services, which is what we call the labor addition to a service bill. So as far as the spare parts is concerned, the margins are in the region of around 20% to 25%, depending on what brand, what spare parts that you are selling. And as far as the labor component is concerned, we have a margin of around 80% on that. So this as a blended thing comes at around 40% or so. Also, what is important to note is that we need a critical car park where the business becomes extremely profitable for after sales going ahead. So brands like Jeep, I'll just point out a very simple thing. We started only in 2017 and 18. So those brands where we will have a critical mass of vehicles now on road, the business will become significantly profitable going ahead, which is right now a kind of a flattish. I'm talking about a single brand. So this is something which is very important. As far as the other margins are concerned, Mercedes-Benz has now gone into a very nice asset-light model where we do not hold inventory in our books. And whatever we sell, we get a clean margin. There is no discount, all India, one price. So Mercedes-Benz, we get a clean 5 to 6% margin at the end of the month that we sell the car. Okay. We make, as far as the group is concerned, one can see that approximately just under 1% of what we sell, we make by way of finance and insurance. So this is again a very simple, predictable business that we run. So to look at the business, we have a after-sales business which is growing at around 20% CAGR for so many years, and which will continue to grow at 40% margin, a gross margin, 18% EBITDA margin. Then on top of it, you have the finance and insurance clean slate income of new car sales, and then there is the new car margin. Now, if you add it all up, it becomes a great scoop at around 6.5% EBITDA and 2.5 to 3% net margin business.
That was actually going to be my next question. What kind of blended margins are you looking at? At FY22, it was 5.9%, expecting 6.2% to 6.3% going forward.
Yeah, I think that's what will happen already. I think it is happening, and I'm sure the better times are ahead of us.
Just quickly, before we let you go, what currently is your market share in the brands that you have? I mean, there are non-exclusive contracts that you have as well. And what are the chances of you, increasing your market share there, increasing your geographical presence? You said you are looking at inorganic growth.
Significant possibilities. So we are the largest partners for Mercedes-Benz. 1 in 6 Mercedes sold in India is by Landmark, and we have gradually increased our market share year on year. We are the largest partners for Honda. We are the largest partners for Jeep, around 27% market share. Our Volkswagen market share is now touching close to 10% in India, where the volumes are growing. BYD, it's early days, but my sense is that we will be between 15 and 20% of their all India sales for BYD going ahead. And I mean, we become the meaningful player. I mean, the way Landmark is that we are the meaningful player for everybody that we partner with. And we have a seat at the discussion table. And yeah.
Yes. All right, Mr. Thakker, it was a pleasure speaking with you. Thank you so much for joining us and detailing your business prospects and details as well there. Thank you so much for joining us today. Well, that's Landmark. New listing down around 8.5% today. But for now, we'll slip into a short break. Up next, Dharmesh Shah of ICICI Direct will join in to discuss the technicals of the market. Stay tuned.